All right, so today we're diving into something that's a big dream for a lot of people here in Kenya.
Owning a home.
Exactly. And, for many, the path to that dream might involve taking out a mortgage.
Right.
But before anyone jumps headfirst into the world of home loans,
hmm
we're going to take a deep dive together and figure out if you're truly mortgage ready here in Kenya.
Yeah, that's a really important point. I think a lot of people get swept up in the excitement of potentially owning a home,
Yeah, for sure.
but taking on a mortgage is a huge commitment,
Absolutely.
and you got to be prepared.
Yeah, one of the things that stood out to me in the research is that even with all this talk about, affordable housing programs,
hmm
mortgages might not actually be the best fit for everyone.
It's true, and they're often, geared towards a specific segment of the population.
Right.
Not everyone.
Okay, so let's unpack this a bit.
Yeah.
One of the things our research highlights is this idea that mortgages, even those backed by government programs,
Right.
they're often designed with middle and upper income earners in mind.
Yeah, and there's actually a case study that really highlights this.
Okay.
It focuses on a family trying to purchase a three-bedroom unit through one of these so-called affordable housing programs,
Okay.
and the numbers are really interesting.
Okay, let's break it down. What kind of financial hurdles we're talking about here for this family?
Well, first of all, even before they get to the mortgage itself,
Right.
they need a lot of savings.
Okay.
Like, we're talking at least 350,000 shillings just for closing costs.
Okay.
Things like stamp duty and legal fees, valuation fees, insurance, all of that.
Those add up.
And that's just the bare minimum. If the lender asks for a 10% deposit on top of that,
Wow.
then that amount basically doubles.
So we're talking about a significant chunk of change just to get started.
Yeah, absolutely.
Wow.
And then you've got the monthly repayments themselves.
Okay.
So let's say this family manages to get a mortgage through the Kenya Mortgage Refinancing Company.
Okay.
They might be able to snag a decent interest rate, maybe 9.5% over 25 years. Even then, they're still looking at monthly payments somewhere between 24,465 and 27,525 shillings.
Okay, so what does that mean in terms of the income they need to be earning to comfortably make those payments?
Well, based on those figures, they would probably need a combined gross monthly income of somewhere between 136,000 and 153,000 shillings
To handle those comfortably.
to handle those repayments, yeah, without stretching themselves too thin.
That's a pretty big number, especially when you consider the average income for a lot of Kenyans.
Yeah, you're absolutely right, and that's the reality check.
Yeah.
For those earning, below 50,000 shillings a month,
Right.
these affordable options,
Right.
they may still be out of reach,
Even with government programs.
even with government backing.
Yeah, it makes you think who is a mortgage actually a good fit for in Kenya?
That's the question, isn't it?
Yeah, so if this family we were just talking about might not be the ideal candidate,
Right.
who would be?
Well, you have to think about people with high and stable incomes. So
Okay.
those with secure jobs or, folks with diversified income streams,
Right.
maybe successful businesses with, consistent cash flow,
So stability is key here.
stability, and a good financial cushion.
What about Kenyans who are living and working abroad?
Oh, yeah, good point.
Are they in a good spot for a mortgage back home?
Often they are.
Okay.
Because, Kenyans in the diaspora often have access to higher incomes and sometimes even lower interest rates.
Right, in their countries of residence.
Exactly. So a mortgage in Kenya could be a really smart investment for them
Okay.
while they maintain that financial flexibility elsewhere.
It sounds like having a strong financial base is the foundation here,
It's crucial.
but we also can't ignore the bigger picture.
What do you mean?
The overall economic climate in Kenya.
Oh, yeah, for sure.
It plays a huge role in all this.
Absolutely, because, Kenya's economy can be a little unpredictable.
Definitely.
And that adds a whole other layer of complexity to this whole mortgage readiness thing. We're talking high inflation, the currency fluctuates.
Right.
And interest rates can be a bit of a roller coaster.
That unpredictability can make planning for the future feel like a guessing game sometimes.
You're telling me. And that's exactly why,
Yeah.
understanding those economic factors and building financial resilience is so important.
Right.
It's about being prepared for those potential shifts and having a plan to adapt if things change.
So can you give us some real-world examples of how these economic shifts can actually impact mortgage holders?
Oh, yeah, for sure. Let's go back in time a little bit to 2004,
Okay.
when the average lending interest rate was around 12.5%.
Okay.
Now imagine someone took out a 10 million shilling mortgage back then. with a 15-year term.
Okay.
Now, fast forward to 2013,
Right.
interest rates had jumped to almost 20%.
Ouch. What did that mean for their monthly repayments?
Well, their monthly payments would have gone from around 132,000 shillings
Right.
to a whopping 193,000 shillings.
That is a massive jump.
A huge difference. And if their income hadn't, kept pace with those rising interest rates and inflation,
Right?
they could have found themselves in real trouble,
Yeah.
potentially even facing the risk of defaulting on their mortgage.
That's a scary thought.
Mm.
It really highlights how important it is to consider these potential fluctuations
Oh, yeah.
when you're assessing if you're ready for a mortgage.
You got it. And it's not just about, the big picture economic trends.
Right.
We also have to consider the individual's own financial health.
Look-
A lot of Kenyans live paycheck to paycheck, which doesn't really leave much room for unexpected costs or, disruptions to their income.
Right. And, unexpected events like job loss or illness or family emergencies,
Exactly.
they can happen to anyone.
Absolutely.
And they can completely throw off even the most carefully planned budget.
You're right. And those kinds of events can be devastating.
Yeah.
When you've got a large mortgage payment hanging over your head,
Yeah.
missed payments can lead to penalties.
Right.
And worst case scenario,
Or closure.
that's scary.
Yeah.
So what are some steps people can take to kind of build that financial resilience?
Well, it's all about building safety nets,
Okay.
having emergency funds,
Right.
maybe even exploring ways to generate additional income.
Okay.
It's about being realistic about what you can truly afford
Mm-hmm.
and having that buffer built into your budget to absorb those unexpected shocks.
It sounds like being prepared for the unexpected is key,
It is.
even though we can't always predict what life will throw our way.
Exactly.
Yeah?
And speaking of being prepared,
Yes.
there's this concept I think is really important,
Okay.
although it might seem a little counterintuitive at first.
Okay. I'm intrigued.
The exit strategy.
What's an exit strategy when we're talking about homeownership?
It's not about planning to fail.
Uh-huh.
It's about acknowledging that life happens.
Right.
Circumstances change.
Yeah.
Priorities shift. And sometimes even the best laid plans need to be adjusted.
So it's like having a backup plan in case things don't go exactly as you expected? Exactly. An exit strategy means having a plan to adapt if necessary.
Okay.
Whether it's due to financial hardship, a change in your personal priorities, or even, shifts in the housing market.
So give us an example. What might that actually look like in the real world?
Well, think about having a plan to maybe downsize to a more affordable property if you experience a job loss.
Okay.
Or maybe having the flexibility to rent out a portion of your house to generate some extra income if needed.
So having options and being able to kind of pivot if you need to.
Exactly. Sometimes the best exit strategy, even if it's a tough one,
Yeah.
is to sell the property, even if it means taking a loss.
So sometimes letting go can be the best way to avoid a bigger financial headache down the road.
Precisely. Having that exit strategy in place from the beginning can make those tough decisions a little easier.
Right.
It gives you the power to adapt and move forward, even when you're faced with unexpected challenges.
It's a powerful way to think about it. It's not giving up on the dream of homeownership. It's about being smart and adaptable in a world full of uncertainties.
Absolutely.
And this leads us to another important point, right?
What's that?
Alternatives.
To the mortgage.
Yeah, to the traditional mortgage route.
Oh, there are actually quite a few options out there.
Okay, let's explore those. What are some of those alternatives that Kenyans might want to consider?
Well, renting is a big one.
Okay.
It offers so much more flexibility, especially if you're not sure about settling down in one location, or if you're just not ready for that financial commitment of a mortgage.
So renting can actually be a strategic choice?
It can.
It's not just a temporary solution.
Exactly. But if you're set on owning a home, there are other paths.
Okay.
Buying land while you save up for construction
Okay.
can be a good way to get started without taking on a huge loan right away.
Right. I've heard that's a popular strategy.
Yeah.
What are some other options that people might not be as aware of?
Well, there are these rent-to-own schemes
Okay.
where you're essentially renting a property, but you have the option to buy it later.
Okay.
And then there are off-plan purchases
Yeah.
where you buy a property before it's even built.
Interesting. So there are a lot more paths to consider than most people probably realize.
Yeah,
Are there any other paths to homeownership that are worth exploring?
definitely. Joining a homeownership savings plan
Okay.
or a SACCO can be a great way to build towards that dream.
SACCOs, yeah. They're a big part of the financial landscape here in Kenya.
Yeah.
Can you remind us how they work and why they might be a good option for potential homeowners?
Sure. SACCOs are savings and credit cooperative organizations.
Yeah.
It's basically a cooperative approach to saving and lending.
Okay.
They often have more favorable terms than traditional banks.
Right.
And it's a great example of Kenyans coming together to support each other's financial goals.
So kind of pooling resources and supporting each other on that journey to home ownership?
Exactly. It's a community-driven approach to financial empowerment.
I like that.
Yeah.
And even if you do decide to go with a traditional mortgage, it's still important to shop around, right?
Oh, absolutely.
Different lenders will offer different interest rates and loan terms and fees.
All kinds of things.
It's worth comparing to make sure you're getting the best deal for your situation.
It's just like anything else.
Right.
A little research and comparison shopping can go a long way.
Makes sense.
Hmm.
So staying engaged and informed is key throughout this whole journey.
Absolutely.
We've covered a lot of ground here from, the nitty-gritty financials to alternative paths and the importance of an exit strategy. Before we move on, I want to circle back to something we touched on earlier.
Okay.
That financial resilience, especially in the face of Kenya's dynamic economy. Any final thoughts on that for our listeners?
Well, I think the main takeaway here is that a mortgage in Kenya is achievable,
Okay.
but it requires careful planning. You need a good understanding of the risks
Right.
and a willingness to adapt as circumstances change.
So it's not a decision to be made lightly.
Not at all.
Yeah.
But that doesn't mean you should give up on your dreams. It's
Right.
about being informed,
Yeah.
prepared, and most importantly, realistic about what you can afford.
And there's no shame in choosing alternatives to a traditional mortgage if they're a better fit for your needs
Absolutely.
and your risk tolerance.
Yeah, the goal is to find the best path to homeownership for you,
Right.
one that aligns with your circumstances and your long-term financial well-being.
Well said. I think this conversation has given us all a lot to think about. We've explored, the financial landscape, the emotional aspects of mortgage readiness.
Right.
But what about the actual resources and support systems that are available here in Kenya?
Oh, good point.
Let's dive into those when we come back.
Sounds good.
We've been talking about the, financial side of things when it comes to being mortgage ready here in Kenya. But there's a whole other dimension to this that I think we need to explore.
Yeah, what's that?
It's the emotional side of home ownership.
Oh, absolutely. Owning a home, it's a huge milestone for a lot of people.
Yeah.
And it's about so much more than just, a roof over your head. It's about creating a space for yourself and for your loved ones.
It's about putting down roots.
Yeah, and building a sense of security and belonging.
It's that feeling of turning a house into a home.
Right, exactly. And those emotions are powerful.
Yeah.
But they can sometimes cloud our judgment when we're making these big financial decisions.
Yeah. I can see that happening. You fall in love with a property and suddenly, practicality goes out the window.
It happens all the time. It's easy to get caught up in the excitement of finding that, perfect place.
Right.
And lose sight of the long-term implications of taking on a big loan.
So how could we find that balance?
Between the emotions and the reality.
Yeah. Between our hearts and our wallets.
I think awareness is key.
Okay.
You have to recognize those emotional biases and make sure they're not dictating your financial decisions.
So take a step back.
Yeah, breathe.
Breathe and ask yourself some tough questions.
Exactly. Like, can I really, truly afford this?
Right.
Does this align with my long-term financial goals?
It's about having that honest conversation with yourself.
Yeah,
And separating the excitement from the commitment.
you got it. Remember, a house is ultimately an investment.
Right.
And like any investment, it comes with, risks and potential rewards.
Right.
Approaching it with a clear head and a realistic understanding of both sides is so important.
So we're talking about emotional intelligence as a key part of mortgage readiness.
I think so. Being aware of your own biases, managing your expectations,
Right.
making sure your decisions align with your overall well-being.
All of that.
It's key.
I imagine that emotional intelligence becomes even more important when things don't go according to plan.
Oh, absolutely.
Because life can throw curveballs.
All the time.
And sometimes those curveballs can really impact our finances.
Yeah, and that's where resilience comes in.
Okay.
It's having that mental and emotional strength to navigate those unexpected challenges.
Okay.
Adapt and find solutions when things get tough.
So resilience isn't just about bouncing back.
Right. It's about being able to bend without breaking.
Exactly. It's about having a plan for those unexpected events.
Mm-hmm.
Job loss, illness.
Shift in the market even.
Yeah. And that brings us back to what we were talking about before.
That exit strategy.
The exit strategy. It's about knowing your options and being prepared to make tough choices if you need to.
Sometimes the most resilient thing you can do
Mm-hmm.
is walk away from a situation that's no longer serving you.
Yeah, it's about choosing to cut your losses
Right.
rather than letting a bad situation drag you down further.
That can be a hard call to make, especially when there are strong emotional attachments involved.
Absolutely.
But it also shows strength
It does.
and a commitment to your long-term well-being.
I like that. And that brings us to another aspect of emotional resilience,
Oh.
seeking support.
So talking to friends, family, maybe even financial professionals.
Absolutely. There's no shame in asking for help,
Right.
especially when you're dealing with complex financial matters.
Yeah. Sometimes an outside perspective can help you see things more clearly.
Give you some clarity.
Yeah, and help you make more informed choices.
So it's about building a network of support, a
Well-
team of people who can help you navigate the ups and downs of homeownership.
Exactly. And that network can include financial advisors,
Mhm.
real estate agents, lawyers,
Wow.
even just, trusted friends and family members who have experience with this stuff.
It's recognizing that you don't have to go through this alone.
Exactly. And that support system can make all the difference in the world.
Yeah, it can help you make sound decisions and weather those inevitable storms.
For sure.
So we've covered a lot today, from, the nitty-gritty financials to the emotional and psychological considerations that can really make or break this whole experience.
Yeah.
Is there anything else you think our listeners should keep in mind as they go down this path?
I think the biggest thing to remember is knowledge is power.
Mm-hmm.
The more you know about the process,
Right.
the risks, the potential rewards, the better equipped you'll be to make decisions that truly align with your goals and your values.
And that knowledge shouldn't just be about finances, right?
No.
It's about understanding your own emotions,
Mm-hmm.
your risk tolerance, your ability to adapt.
Absolutely. It's about taking a holistic approach to mortgage readiness,
Yeah.
one that considers all the factors at play, both practical and emotional.
Well said. I think this conversation has given us all a lot to think about.
Me too.
We've explored, the financial landscape,
Yeah.
the emotional landscape of mortgage readiness.
Right.
But what about the resources and support systems that are available here in Kenya?
Oh, yeah. Good point.
Let's dive into those when we come back for the final part of our deep dive.
Sounds good.
Welcome back to the deep dive. We've been having a really fascinating conversation about what it takes to be mortgage ready here in Kenya.
Yeah, we've covered a lot of ground,
Definitely from the financial groundwork to the emotional aspects.
Right. Taking on such a big commitment.
Absolutely.
Mm-hmm.
So as we wrap up this deep dive,
Mm-hmm.
I want to leave our listeners with some, key takeaways and some resources
Yeah.
to help empower them on their homeownership journey.
Sounds good.
What are some of the most important things do you think potential homeowners in Kenya should remember as they move forward?
Well, I think the first thing to remember is that a mortgage in Kenya is definitely attainable,
Okay.
but it does require a solid plan,
Right.
a realistic assessment of your finances,
Yeah.
and a willingness to adapt as things change.
Yeah.
Don't let the excitement of owning a home
Right.
cloud your judgment when it comes to the financial realities.
We've been saying it throughout this deep dive.
Yeah.
Knowledge is power.
It really is. Equip yourself with as much information as possible.
Right.
Research different mortgage options.
Mhm.
Compare interest rates and terms from different lenders.
Yeah.
Don't hesitate to ask questions.
Right.
There are resources out there to help you understand the process.
Speaking of resources, are there any specific websites or organizations or even experts that you would recommend our listeners check out?
Yeah, definitely. The Kenya Mortgage Refinancing Company,
Okay.
KMRC for short,
Okay.
is a great place to start.
Okay.
They've got a ton of information on affordable housing programs,
Right.
and they can connect you with partner institutions that offer favorable mortgage terms.
That's a great tip.
Any others? Reaching out to reputable financial advisors
Alrighty.
who specialize in mortgages and real estate is also a really smart move.
Okay.
They can provide personalized guidance,
Mm-hmm.
help you analyze your financial situation,
Right.
and create a plan that's right for you.
It's like having a personal coach in your corner guiding you through the process.
Exactly.
Yeah.
And, don't underestimate the value of talking to people who have been through this before.
Right. Like tapping into the experience of others.
Exactly. Friends, family members, colleagues who have already bought a home.
Right.
They can offer really valuable insights.
Yeah.
Practical advice that you might not find in a textbook.
Right. Those real-life experiences were so valuable.
They are. It's one thing to learn about the theory,
Right.
but it's another to hear about the lived reality of what it actually means to own a home.
Absolutely. And that brings me to another point.
Mhm.
I think There's no one-size-fits-all approach to homeownership.
You're absolutely right. What works for one person might not work for another.
Right.
The key is to find a path that aligns with your individual circumstances.
Yeah, your financial goals,
Yeah.
your risk tolerance.
Exactly. And, that might mean thinking outside the box a little bit,
Right.
exploring alternatives to that traditional mortgage route.
Yeah, we talked about things like renting strategically,
Mm-hmm.
saving up to buy land,
Yeah.
maybe even considering rent-to-own schemes.
All good options. Be open to different possibilities
Mm.
and make informed decisions that prioritize your long-term financial well-being.
It's about remembering there's no right or wrong way
Right.
to achieve this dream of homeownership.
Mhm.
What matters is finding the path that's right for you.
Well said. It's your journey, your dream, and ultimately your decision.
I like that. We've covered a lot of ground in this deep dive today.
We have.
We've really tried to equip our listeners with the knowledge and insights
Yeah,
they need to embark on this journey here in Kenya.
absolutely.
Any final words of wisdom before we sign off?
I would just say homeownership can be an incredibly rewarding experience, both financially and emotionally.
Hmm?
But it's a journey that requires, careful planning, a realistic mindset, and a healthy dose of resilience.
For sure.
Arm yourself with knowledge.
Yeah.
Seek expert advice when you need it, and never be afraid to adapt your plans as things change.
Wise words.
Yeah.
And to our amazing listeners, thank you for joining us on this deep dive into mortgage readiness in Kenya.
Yeah. Thanks for listening, everyone.
We hope you found this episode informative and empowering and maybe even a little bit inspiring.
Remember the journey to homeownership.
Mm-hmm.
It's a marathon, not a sprint. Take your time, do your research, and make choices that align with your long-term vision.
And most importantly, enjoy the process.
I like that.
That's a great note to end on. Until next time, keep those brains buzzing,
Yeah.
keep those hearts streaming, and keep on diving deep into the world of knowledge.
We'll see you on the next Deep Dive.